Good morning, Wall Street winners. It is October the 1st. Can you believe that we are already into the month of October? Time has flown by in 2024. And if we look at the futures markets right now, you can see that the NASDAQ is in the green only slightly. The Dow is down about 120 points, and the S&P 500 is pretty much flat. And that is after a pretty positive day and finish to the day yesterday. If we take a look at the main page of the Bloomberg app, Israel has entered Lebanon and is fighting against Hezbollah, has bombed in the middle of the city, and it's just a bit of a gong show over there. The interesting thing about this and why I bring it up is because this is still deemed a conflict, not a war. And I think what we're going to see is once that wording changes and this becomes a war as opposed to a conflict, we're going to see crude oil prices shoot up dramatically. So I think we're in a really interesting spot right now to be buying oil and oil stocks ahead of this change in wording, which doesn't seem like a lot, but as soon as it becomes a full-on war, it gets a lot more support from different governments around the world. And with that support comes economic gain for many organizations, and often stock markets will rally around that sort of thing. So that's my prediction. I have no insight, obviously, into that and into the inner workings of government at the highest level, but I believe that to be the case. We can see as we look through the Yahoo Finance app today that Costco looks like it's going to continue its recovery. It started off very strong yesterday and only came down from that strong start, but it is still up based on where it was yesterday. I do expect this stock will be back up in the $1,000 range by, I'm going to say, the third week of October. So about 3 weeks out from now. We can see Lulu's taking a bit of a dip here. We can also see that Nike, which has earnings coming out today, so we're going to hear from Nike. It's off a little bit. If Nike is able to surprise to the upside and give a positive outlook, which remains to be seen whether it can do that, but if it's able to do that, this stock could get to $95, $96 by tomorrow's open or after market today when they announce. Healthcare stocks pretty much flat. They're in the red a little bit, but they're pretty much flat. Our transport stocks, interesting here. Transport really didn't get hit that hard yesterday. Now that the container ship offloading union, that I forget what they're called, but now that the shipyards that offload the cargo from the tankers or the transport carriers are on strike, this, I think, is going to have a negative effect on transport, but we haven't seen it yet. They went on strike at midnight last night, so we'll see what happens there. Apologize for not knowing the proper name for those folks. And then we've got oil, and oil had a terrible day yesterday, not horrific, but bad. Looks like it's setting up for another bad day or start to the day today. Crude is down almost at $67. It's on the low side of 67. So I think it's an interesting time to buy. I mean, when you look at wanting to get into a position and hold the position, this isn't a day trade type of deal. It could be a swing trade. It could be a longer time hold. But when you want to get into an oversold position, you want to do that when people are selling, not when the price is at the premium and everybody's trying to sell. You want to get in now when there are fewer buyers and more sellers. And if we look at a company like Valero as an example, you've got a price earnings ratio of almost 7.5. And this keeps coming down because the price keeps coming down. You can see that in the 52-week range, this is getting close to its $120 52-week range, and it was up as high as $185. Now, I'm not saying it's going to $185 in the next week or so. That would be unrealistic. But there's a point in time when we hit a bottom and we start to trend upwards. And I think that conversion of narrative from to a war is the possible trigger point for that to happen. So, and then with the fall cooling and winter cooling and the need for additional heat and gas and pickup in manufacturing globally, even as China comes on board now, I think all of the variables that kind of needed to flip to the positive have started to flip, if not already flipped. So it's about getting in a little before the masses here with this kind of a purchase. So that's oil. We go down to tech, and you can see earlier this morning, really everything was in the red. Some things have started to bounce back here. Apple had a good day yesterday, up $5, but it looks like it's off about $3 in the pre-market today. Microsoft's still hovering around that 430 range. Nothing there to really get excited about. ARM up at 143, in my opinion, way too high, but very volatile. So certainly the opportunity to make some money on that one if you get in at the right time and obviously out at the right time. AMD at 164, I think you're going to be in a good position here. I only see positive for AMD going forward. Qualcomm at 170, not a bad price in my opinion there. I think there's a lot of potential on that side as well. Lam Research, they got hit a little bit yesterday, down $11. They're up $3 pre-market. I like Lam Research. I don't think it's an overnight win. I mean, the other day it was up $45, so that would be a day win. And it's not going to do that every day, but after it drops in a day, it's probably going to recover a little bit, especially if the NASDAQ, the overall index, and semis in general recover. So if all of that lines up, it might be an interesting purchase. Meta just continues to make positive moves. Meta is just knocking it out of the park from a stock price perspective, and we'll have to see what they come in with this quarter with earnings, but I do expect them to be positive. Alibaba and most of the Chinese e-commerce stocks have done very well in the last month or so. Now, in the last 2 or 3 years, they've done extremely poorly, but in the last month, they have had a great run, and I expect this run to continue. Now, it may not continue in the size that it has in the last week because of the stimulus announcements coming out of the People's Bank of China, but I do believe that once we start to see proof of those things happening, and that can take 3 to 6 to 9 months for those signs to show up. But these companies are very strong. Alibaba, extremely strong, great cash flow position or cash position, and a huge creator of cash flow and doing massive share buybacks, which only help on the earnings per share side of things. I think it's a good bet. I think that stock is going to be a $150 stock by March of next year. And then Google. If you took my advice on Google last week and bought in, you would have been up more than 5%, maybe 10%, depending on if you sold and then bought back in when it dipped. But this stock is part of that, is a late bloomer in the tech recovery. So a lot of the other tech stocks made quick recoveries. Google did not, but Google or Alphabet is an extremely strong company, and it's up 223 in the pre-market. Now, that's not to say it's going to be up that much at the open, but if it is, you're almost a $70 stock. And we were talking about this when it was down in the 153s. So you've done extremely well if you bought in and then exited and bought back in when it dipped. TSM had an off day yesterday. It should recover for the most part today. I think TSM is going to be $190, maybe $200 stock by the end of the year. And then we've got our financials. And the financials yesterday dipped. Goldman got down to $492. That was a great buying opportunity. I alluded to that in yesterday's video, saying that if it dropped into the low 490s, that was a steal. You would have made $3 a share, and it's likely to continue to go up today. Charles Schwab had an okay day yesterday. It looks like it's off to a good start today as well. And then you've got Morgan Stanley. Morgan Stanley at 104.24. I think it's still got room to move to the 106, 108 range with earnings. And then JP Morgan as well, down in it was under 210 yesterday. I think it dropped down into the 206 range. It looks like it's off this morning going into the open. This would be a good pickup if it's down in the 208, 209 range for a hold into earnings. Yeah, you can see that yesterday it dropped into the 206.68 range, so 207, let's call it. That would have been a steal to pick up at that amount. So look for those buying opportunities. Don't feel like you have to buy. Don't be pressured to make a trade. Just put your limit order in and wait to see if it fills. I did that yesterday, actually, with Google. Let me use this as a great example. So yesterday, I put in a buy order at 165.78, I want to say, and it triggered right around the open. I put it in pre-open, pre-market, but not for day plus extended. I just put it in for the normal trading day. I put it in lower. It was about 80 cents lower than it closed at. It triggered, and then by 2 o'clock, I sold out. Now, I missed the profit at the end of the day because it did spike at the end of the day. I could have doubled that money, but I bought into something else instead and made some money on that. And that was Goldman that I bought into. But I was able to make 1% in a day, and just with a limit order for the buy, and then I set a limit order for the sell. I think I sold out, I don't know, about a buck more. So it was about 1%. I think it was 0.9% was the gain. So that's the strategy here, is to put in orders and see if they trigger, and then sell when they bounce back up. And that will allow you to put your money to work for you instead of you having to go out and work for your money. I really hope you're liking these videos, and if you are, please consider subscribing to the channel. I'd love to hear from you in a comment and some feedback. We've had some great success from folks watching these videos on the channel, making 10% gains, making 1% gains. I mean, the percentage gain is, the higher obviously is better, but if you're just hitting singles and making 0.5 to 1% on each of your trades, you're doing extremely well when you annualize that. And that's what we're trying to teach here. And I hope that that's something that you're picking up on. Good luck with your trades today.